Here's the truth. Most people do not actually know what they're looking at when they open a chart. They see patterns, colors, indicators, but no real structure. So in this video, I'm gonna break down candlestick patterns in a way that actually helps you understand what price is doing. So let's not waste time, let's get straight to it. So we're gonna start this video with engulfing pattern. I discussed this in the last video, so go check that out. This is one of the strongest signals in my opinion, but obviously when it shows up in the right area. So pretty much a bullish engulfing candle is when a strong green candle completely covers the previous red candle. And what that's telling you is honestly pretty simple. Sellers were in control and then buyers stepped in with enough strength to completely take over. On the flip side, a bearish engulfing candle is when a strong red candle completely wipes the previous green candle. And that's pretty much telling you that sellers are starting to step up and then take control on their end as well. But here's where people mess up. So they see an engulfing candle and they instantly take a trade. But as we know, that's not how you should use it. An engulfing candle at a random area doesn't mean anything. But if you start looking at key levels that you mark on your chart, that's where it actually matters. Pretty much bullish engulfing at support, that means that buyers are stepping in. And then bearish engulfing at resistance, that means sellers are stepping in. So you have to know which one is bullish, which one's bearish, and then take your trade based on that. Next on the list is what I call the pin bar pattern. And this is one of the cleanest ways to see rejection, at least in my personal strategies. And pretty much a pin bar, if you can see, it has a small body and a long wick. And if you're trading and you see a lower wick and price is pushed lower, that means sellers at that time thought they had control, but buyers stepped in and then pushed it back up. So that's why you see that long wick, and that's rejection of lower prices. So if you see a long upper wick, that pretty much means it's the opposite. So price pushed higher, buyers were in control, but sellers stepped in and pushed it back down. So that means that's rejection at the top. So again, context always matters when you're looking at candlesticks. So for here, a pin bar in the middle of nowhere doesn't mean anything. Just like the engulfing candle, you have to use these at key levels that you mark on your chart. Next on the list is honestly underrated, and it's what I call the 3-bar continuation pattern. So a 3-bar continuation is pretty much when you have a strong move and then there's like a small pause and then continuation in the same direction. It's pretty much the market basically taking a breather, if that makes sense. So realize momentum doesn't just go straight up or down forever. It moves and then pauses, like I said, and then it continues. And I noticed that a lot of beginners think the move is over during that phase. And this is where you want to stay with the trend. So don't think like majority of people think the trade is done for. Because honestly, for me at least, there's plenty of times where I try to fight the trend and ended up draining my whole account.
What? Bro, what are you talking about, man?
So no matter what, always try to follow the trend on a candlestick pattern similar to the 3-bar continuation. But for the opposite, it's what I call the 3-bar reversal pattern. This is when you usually see a strong move, just like the 3-bar continuation, hesitation, and then a strong move in the opposite direction. So that's going against the trend. So to me, that shows me that the current trend is losing strength, and then the next candle confirms that shift. But again, this doesn't mean every reversal pattern worked. I don't want you to watch this video and say, if I see these candles, that means 100% of the time I'm going to be winning my trades. Trust me, that's not going to work. Same thing with momentum indicators, RSI, MACD, volume. You can look at all of that and you can still be completely wrong. But these are just patterns that you can add on top of other indicators like volume or simple things like price action. If you pair all those together, then that is where your trade can likely go in your favor. That's why I'm going to get into the next one, which is the breakout candle. And pretty much a breakout candle is when price pushes through a key level with strong momentum, not just a small break. This is usually when volume comes in and price starts to move pretty quickly. So most people in retail, they will start to chase the breakout after it's already extended. But by the time everyone sees it, the move is already happening. The real edge comes from recognizing the buildup before the breakout. To me, that is where opportunity is. You have to have the mindset that whenever everyone leans to one side, always do the opposite. So next on the list is what I call shrinking candle. This is where a lot of people overlook, including myself when I first started. And pretty much shrinking candle is when candles start getting smaller and smaller, and that pretty much means momentum is slowing down. And you have buyers and sellers, you know, starting to balance out. And this is usually what happens before a big move. So I used this strategy to catch, I believe it was ticker symbol ZM. That's when it was compressing within that round bottom, and then we saw that big breakout. But before I took that breakout, I used this candle strategy as an indicator for my entry for the Discord. So think of it like, you know, pressure's building, and the tighter price gets, the stronger the move tends to be once it breaks, at least in my from my experience. So when you see shrinking candles near a key level, don't ignore it. If you combine with everything we talked about, you know, the levels, you know, structure, momentum, you can use RSI, small things like price action, that's when things start to come together. This is just a small excerpt to candlesticks. If you guys want, I can make a candlestick patterns part 2 video, but hopefully this helps you understand candlestick patterns a lot better and how to actually use them in real situations. Because at the end of the day, it's not about memorizing patterns. It's about understanding what price is doing and having a system behind the trade. If you want to take a step further, I break down all of this inside the Discord: entries, exits, levels, etc., etc. So check that out in the link below. Let's get this to 100 likes, and I'll see you guys in the next video.